Hello dear crypto friends, and welcome to today's video in which we are going to talk about some fascinating correlations between Bitcoin, the stock market and government bonds. Wow, that is quite some fascinating stuff, because on this channel we always want to think about the macroeconomic picture and think about what are the implications on Bitcoin, and can we maybe deduce something out of stocks, bond yields, the dollar index and so much more in order to predict what Bitcoin is going to do in the next days, weeks and months. And forgive my strange voice today, because I have catched a brutal cold and now I sound weird and have to blow my nose 500 times per day. But apart from that, everything is fine, so let's start right away with the video. I have, as you can see, loaded the Bitcoin price versus the dollar index. So in orange you see the dollar index and the candlestick charts are the Bitcoin price. And what do we see? I mean, we see a ridiculous anti-correlation. We have always looked at the longer term Bitcoin price versus the dollar index. We have always seen that there is a strong anti-correlation, but we haven't yet looked at the shorter time frame correlation, and this is the 4-hour chart. So we see that it's ridiculous. Every time Bitcoin spikes, the dollar index has a low, and vice versa. Here we can also zoom in. We see those two dips here exactly correspond when the dollar index has a high here, and even this here to some degree, right? The dollar index makes a low and Bitcoin has a high, and even these two funny ones here, right? And then of course, most notably, as soon as the dollar index started going on this massive rally here, which started in late March, went on a massive rally, this is exactly when the drop in Bitcoin started. And look at the hilarious coincidence of the low in Bitcoin with this top in the dollar index. I mean, people every time say, yeah, this crashed because, I don't know, Tether, because Luna, because UST, because of this drama. Guys, look at this insane correlation. If you want to tell me that this is a coincidence, that the Bitcoin price has this low spike almost exactly on the day where the dollar index has its high, its highest high since 20 years, I think that is no coincidence. I mean, we can clearly see this insane anti-correlation. So what does this mean now for our Bitcoin price? Well, we know that there's an anti-correlation to the dollar index that is fine and well. We have analyzed it in the last few videos. But of course, there's also this insanely strong, hilarious correlation to the Nasdaq, which is also super hilarious if you ask me. Look at this. We have the Nasdaq in orange, and again the candlestick charts are Bitcoin. And look at this correlation. I mean, this is I mean, this is hilarious. Look at this. Even the spikes here, everything seems to coincide, everything. Only here now, lastly, in the last 2 days, it seems that Bitcoin doesn't want to dump anymore, and the Nasdaq has revisited this low and Bitcoin didn't want to revisit. This is like a deviation, but most of the time we can see the incredible correlation of the Nasdaq and Bitcoin, right? This is hilarious. And if we go to weekly time frames, this is still true, right? This is not only on short time frames. Look at this. I mean, it always coincides, right? And Bitcoin has only existed in this giant stock bull market that has been going on since about 2009 or 2010 now. So since over 12 years. And Bitcoin first started trading in 2010. So this means that Bitcoin has only ever seen a stock bull market. And we can clearly see that every time Bitcoin spikes, there's also a spike in the Nasdaq. Look, even those two spikes here in the Nasdaq are represented here. And here, this spike, even in late 2013. And then we have dumps, right? We have dumps almost coinciding, not quite, but almost coinciding with the low in the Bitcoin market. And then we have this high here. We have a peak in the Nasdaq. We have this low here in 2018. We have this low in Bitcoin. The March 2020 low, of course. And if we zoom in, of course, we even see this correlation here with this peak structure where it absolutely coincided with Bitcoin. So we see even on longer time frames, the Nasdaq and Bitcoin is hilariously correlated. I mean, to a ridiculous degree. Now, there's a fascinating hidden relationship about which I want to talk, namely the relationship between the US 10-year government bond yields and the long-term stock market behavior. So this is the weekly chart here, right? And I have loaded the 10-year government bond yields, and we see that they are in a downtrend. They are in a brutal downtrend since basically 1980. So since this chart here exists, they are in a continuous downtrend. So could we learn something from it? Is there a correlation with the stock market? And if there is a correlation with the stock market, consequently, as we have seen, there must also be a correlation with the Bitcoin market and hence with the entire crypto market. So let us zoom in and try to see if there is a secret correlation. And indeed, there is an interesting behavior, which I want to talk about because I think it will be helpful to understand what Bitcoin might be doing soon. So we see that every time the government bond yields reach a peak, right? They reach a peak, for example, here, they reach the peak before the peak in the stock market. Keep this in mind. They reach the peak here in the weekly chart. Let us zoom in even more so that we can see it more clearly, right? They reach the peak before the stock market reaches the peak, and then the yields start dropping, but the stock market is still reluctant. The stock market still pumps. Okay, it has a dump here. It at some point also starts dumping, but then rises again. And only when the yields then just continuously dump and dump and dump for a long time, only then reluctantly will the stock market start doing the same. Okay, this is important. Keep that in mind. So let us see if the same happened in 2008, right? So again, in candlesticks, the yields, and in orange, the stock market. What do we see? We again see that the stock market has spiked here in early June 2007 or mid-June 2007. And this is actually when the stock market would still continue to rally. So the yields already start dropping, but the stock market doesn't want to drop and continues rallying for 4 to 5 more months, okay? And then only when it just continues dropping, then at some point, and also very reluctantly, we still have a huge bounce here, very reluctantly does the stock market then follow, okay? Very important, keep this in mind. Now in 2018, the picture is slightly different, but not very different, because the yield started going down, right? And first, okay, the stock market also dipped here, but then it went on a massive rally, and only then, when the yields really started going down a cliff, only then did the stock market also follow. And we see that this happened before. So the yields started going down the cliff before the top was reached, right? Here, it started going down, it was still rallying, started going down, and only when it became really insanely steep did the stock market then follow, and we had the March 2020 low. So why am I talking about this so much? What does this have to do with Bitcoin? Well, we saw Bitcoin is correlated with the stock market and very strongly correlated with the Nasdaq and with the stock market. So if the government yields now would start to go slightly down, we can assume that this would first create a rally in the stock market, and then it would go down much steeper, and then at some point the stocks would also follow suit. So this is the behavior I want to show you, that first the government 10-year bond yields they reach a peak, a plateau, then they start going slowly down, then the stock market is still rallying, still refusing to go down, and then they fall off a cliff, and that is when the stock market follows. So now looking at the long-term picture, we can see that the yields have been in a continuous downtrend since the early 80s. Since this chart here exists, they have been in a brutal downtrend, and this is actually the first time where the yields have actually passed through this long-term resistance, because this resistance has been respected since over 40 years now. And I think this is a fake breakout. I don't think they are going through now and going to new highs. I think this is a fake breakout. Why? Two reasons. First of all, the weekly RSI. So the weekly RSI of the 10-year bond yields have like the highest values that it ever had. We have values of weekly RSI at 81. And the only times where it was at similar values was in 94, right? In 1994, and in 87, and maybe in 84. Okay, so these are the only times where we had similarly high values of over 80. And we can see that every time the RSI was so high, we started having these massive corrections, right? We started going into a longer downtrend. here also a downtrend. So every time when the RSI was high, let's also take this one here, it also started going into a downtrend. Here also downtrend, here also downtrend. So we have some of the highest weekly RSI values we ever had. So the probability, in my opinion, is very high that it will roll over and go down. We see this even more clearly in the monthly chart. In the monthly chart, we see this even clearer. Let's draw the line again, right? Let's draw the long-term descending resistance line. And in the monthly, the RSI is actually the highest it has ever been. Yes, that's right, friends. The monthly RSI of 10-year US government bond yields is the highest it has ever been in over 40 years. Just think about this for a second, okay? So this means the probability for insane dumps now, that the yields will turn over and go lower, is incredibly high, okay? It's incredibly high. So coming back to my initial thesis, right? The moment the government yields start rolling over, that means that the stock market is first rallying, and then only when they go steeply down a cliff does the stock market follow suit. That happened, as we saw, many times previously. So now the yields start going down. What happens? The stock market will rally, and then at some points they go down steeply a cliff, and then the stock market will follow suit. This is my current thesis of the impact of government bond yields on the stock market, and hence, if now the stock market rallies and goes into a new rally here, of course you can think what happens with Bitcoin. It will follow suit. Now let's do the same exercise again, but this time with 2-year government bond yields. Yes, 2 years. So we see that even the 2 year has some kind of a descending trend line. It's somewhat being respected, but not by much, because now we clearly broke through, right? We clearly broke through, but still, if we look at the monthly RSI, it is again some of the highest it has ever been in recorded history. And this means we are now at RSI values that we have seen the last time in 2018, right? And what happened the last time in 2018? Well, the yields went down brutally here. They really went down quite steeply. And what consequences did this have for the market? Of course, we got a crazy rally. Let's just zoom in, right? So the 2-year yields start going down, right? Start going down. What happens? We get from this bottom here a crazy rally. Look at this, a crazy rally. And only when they start really going steeply down a cliff, like almost vertically, only then does the stock market follow. And we can see that here a top has formed. Now combine this with the fact that the monthly RSI of the government yields is at historically high values. Combine this with the fact, and as soon as the yields start going down, what will happen? The stock market will go up. Consequently, Bitcoin and the crypto market will also go up, and then they will steeply fall a cliff, right? They will steeply fall down, and this is when the stock market is being dragged down. How far? I don't know. I don't want to be super pessimistic and draw a too negative line, but it could go down here or even down here and then stabilize, and then we get a bear market in the stocks and crypto, and at some point a new cycle begins. We can see this also wonderfully clearly, wonderfully clearly in 2006 to 2007. Look what the US 2-year yields did then. They spiked in 2006 and again in 2007, and all the while the stock market was still going up, right? And then it starts going down and the stock market still goes up and makes an all-time high. And then as soon as it goes really down a cliff, then we start going down, but then the rebound, we also get a rebound, and very reluctantly then does the stock market follow. Very reluctantly, right? And only then when the second dump comes, that is when the stock market also follows suit. We can see how reluctant the stock market is to follow the yields. The yields start dumping and the stock market is still like, yeah, party, going higher and higher. And then when the yields really go vertically down the cliff, that is when the stock market follows. So that is how this works. And since I believe that the 2-year yields are now starting to dump and then will at some point go steeply down, I think this is what will happen. And this supports my view that we have a higher probability, again, this is only my opinion, for the stock market and the crypto market to rally. Even more so because everyone is bearish now, everyone is super panicky, everyone is afraid, and normally these sentiments correspond with bottoms and not with tops. Because if this would be so easy, if everyone would be able to foresee bottoms and tops, then everyone would be rich. So this must feel insane, this must feel crazy, this must really feel as if everything would drop down further and further and further, so that the big whales can make a lot of money. So this brings us now in the end back to Bitcoin. I said because of the yields, the stock market will rally, right? We might even see new all-time highs. And that is why I think that Bitcoin will also go into a new wave, the fifth wave of this bull cycle, if you will, and we reach over $100,000. That is my thesis, meaning the fifth wave of this bull market, right? This was an expanded flat correction, and we now go into the fifth wave, right? And if you think, oh, this is not possible because the Fed is rising interest rates, so Sebastian, your thesis must be wrong because rising interest rate means that the dollar will just keep on pumping. I have debunked this idea multiple times here, multiple times. You can watch my older videos, but just as a quick reminder, let us load the Fed fund rate in orange, okay, the interest rate, and compare it with Bitcoin. And we will very fast see that it is absolutely not the case that rising interest rates, which we see here in orange, do correspond with Bitcoin dumps. Absolutely not. I would even say the contrary seems to be the case, because last time we had such a steep rise in interest rates was in 2015, right? Look here, in 2015. Same thing is happening now. Let us assume we go up now with the same pace. Okay, we go up with the same pace. What happened in 2016, 2017? We got a huge Bitcoin rally, friends. We got a huge Bitcoin rally. So it's not that automatically rising interest rates means that the Bitcoin market will drop. This is absolutely not the case. I'm trying to debunk this idea because it's so ingrained somehow in people, because the media keeps repeating this crap. Why? Because they want you to stay poor. What a surprise. The media and all the rich people want you to stay poor. Wow, who would have thought? So they propagate this stupid idea that, okay, yeah, the interest rates are going to rise, the dollar will pump to 150, it will be crazy dollar pumping, so therefore stocks and everything will just continue dropping. But as we see historically, there's no proof for that idea, friends. There's no proof whatsoever. Because if we actually compare the dollar index with candlesticks here in the weekly chart, and in orange the interest rates, then we can see that it is absolutely not just that the dollar index will start pumping when the interest rates go up. Quite the contrary, to be honest. Look at this. This example is the most hilarious one. When the interest rates went up in 2004, and what does the dollar do? Yes, it does pump a bit, it does pump, but then even before we reach the top, it already starts dumping. The same picture already here in 2015, right? The interest rates go up. What does the dollar do? It actually wobbles around a bit and then goes into a massive correction. So this is absolutely not the case that the rising of the interest rates automatically means now that we go into a Bitcoin bear market. This is not the case, friends. Please don't believe this. This is too simplified. The charts are speaking another language, and we always should look at charts and look at hard facts and hard data, even when it seems counterintuitive to us and bizarre, and we think like, wow, this doesn't make any sense. But this is what happened historically, and actually it makes kind of sense if you think about it, because the mere announcement that the interest rates will rise, right? It's being announced, like here the Fed says, hey, we are going to raise the interest rates. And what happens? Woo, the dollar rallies, right? And then the actual raising happens, and it's like people are like, oh, this is actually not as bad as we thought. Not much is actually happening. And then they overestimated the impact on the dollar, and the dollar starts dumping again. I think the same thing is happening now. People overestimated the strength of the dollar. We start rising, people see, oh, the dollar is not as insane as we actually thought. It's just the euro is regaining strength now. The European Central Bank is starting to raise interest rates, so the euro is going to pump, and therefore the dollar index will start dumping. And we actually can already see the first signs of this dump. If we zoom in, friends, This is kind of insane what is happening now. Look at this engulfing bearish candle in the weekly chart. Look at the monthly chart. We have this insane shooting star candle in the dollar index. So for me, the probability is high that we go down now. Combine this with the picture I showed you before of the 2-year and 10-year government yields, and you get the complete picture that it is quite likely that actually now, even though nobody is expecting it, even though it is counterintuitive, even though it feels weird, that we are actually now at a stock market bottom, and that we are getting a stock market rally, and even though nobody's expecting it, and we are consequently getting a Bitcoin rally that will lead us to over $100,000, and many coins will pump. Believe it or not, this is absolutely crazy and counterintuitive, but that is why we look at all these charts, friends. That is why we do this, because we want to have hard facts and not believe hearsay and what the stupid media is writing. Because believe me, friends, the media wants you to stay poor because it's being controlled by rich people, and they just want you to stay poor. Okay, that's what they want. So they will always write the opposite of what you should do. Actually, the media is a very good counter indicator of what you should do. If they say, oh, the stock market will probably collapse, this looks really bad, perfect time to buy. If they say, wow, the stock market is so amazing, you should buy more because it will just continue going up, or you should be careful and immediately get out of the stock market. We see that the fear and greed index in crypto is insanely low. We are always at extreme fear, and we know that if there is extreme fear and panic in the market, suddenly no one is expecting it, and bam, there's a huge rally coming out of nowhere. How could that happen? Wow! What a surprise every single time when there is insane fear. So friends, I hope you found this video informative. If you did so, please leave a like and maybe even subscribe, because I'm doing daily update videos of the crypto market and trying to look at the big picture, compare crypto to stocks, to dollar index, to yields and whatnot, and try to get the complete picture to accompany you on this fascinating journey in the crypto market to Bitcoin's ultimate target of several $1 million per Bitcoin in 10 to 15 years. Thanks for watching, have a nice day, and see you next time. Bye!